Hey folks, this episode is sponsored by City Traders Imperium. Now, what you might not know is CTI has the best funded account conditions up to $2 million, which is the most in the industry. Now, go check out the video I recorded with them to learn more about their incredible package where Trading Nut listeners get an exclusive deal. It includes access to their high-performance trader mastermind and funding program. What are you waiting for? Click the link in the description below or above and go check out that video. All right, guys, we've got Don back on the show here. Now, Don's going to walk us through his full strategy end to end. Don, welcome back. Over to you. Let's share your chart and get on with it, shall we?
Yep. All right, so basically what I'm going to show you guys is just a general breakdown of what I see from the charts from start to finish, from when I look at charts to when, I'm looking for entries, right? So in this case here, I'm noticing that I'm always starting with the weekly time frame. So in this case, the weekly is bullish. We've obviously been trending bullish from I think from last October till now. We've been trending bullish, right? Price is obviously not bearish. We are at a key resistance level though, not a key, but a pretty strong resistance level where price has rejected before in the past. But we don't know if price is gonna reject this level or not yet. Like nobody knows that. Price is always trending bullish. Like we can easily break through towards the next resistance, right? In this case here, I'm looking at my daily. I'll drop down to my daily here, and what I see here is, okay, there we go. I see that price is currently, we have a bearish candle here, right? Day candles are closing in about 30 minutes here, and once we close, we're high chance we're gonna close bearish. That doesn't mean that we're gonna reject to continue down here. Coming down, and we're gonna come down to all-time lows again, or to the bottom of whatever range you're looking at, right? In this case here, what I see is the weekly is bullish though, the day is bearish. If we are able to today eventually push up towards maybe the next push up to break above these candles high here today, then high chance we have a high chance to continue up. This is also called the start replay. Going back to my old video, if a price were to continue back up here, break the highs, I'll look for buys as price breaks the highs on a small time frame. But in this case, off of what we have right now, price did close bearish. We have a high chance to continue down to tap a minor support level, and that could be anywhere. In this case, that could be here, that could be down here, or that can be even down here, right? Those are key levels I'm looking for. I'm always looking left, scanning left for clean traffic. So you see how we have clean traffic here, and then we also have clean traffic here, right? And if you break below here, we have clean traffic there. So these are levels that I have in my head for that day. So price did close bearish. I do expect today's daily candle to continue down towards the next support, so potentially coming down towards these areas. But I'm not going to enter a sell just because I see a daily candle closing bearish at resistance. What I'll do in this situation is I'll drop down to like the 4-hour time frame. I'll go look at the 4 hour. I see the 4 hours bearish. I also notice that the 4 hour is in this range here, a range from here to here. I think this range is about a 94 pip range, right? So if this is a 94 pip range, high chance if price were to break below the support, these would be the better sells, right? Again, like I'm bearish for the day, so high chance we're still able to continue down here to break below support and then eventually look left. Where's your clean traffic now? Your clean traffic is going to be coming down towards these levels down here, right? So this is what I'm trying to catch here for a day. This is what I'm trying to catch overall for a day. So what I'll wait for is I'll obviously wait for a 4-hour closure below that range, and then start looking for entries on a smaller time frame. So this is not even the entry time frame yet. So we drop down to like even the 1 hour time frame here. Again, still bearish, waiting for that support on the 4 hour, which was, let me go ahead and mark it up, which was right here. All right, so this is the 1 hour now. The 1 hour, same thing that you saw on the 4 hour time frame, same thing you see here. Again, it's just overall just a range here, and this is your support. This is the range, right? So if this is your range, I'm just probably gonna be waiting for a breakout here to the downside.
So you're not going to trade that range at all, are you? From top to bottom, bottom to top.
No, because I'm looking for sells, right? If I'm looking for sells kind of at the bottom of the range here, I would probably have to wait for a closure below this range.
Yeah.
So okay, let's drop to like a 30 or something. 30-minute time frame. This is the time frame you should enter off of order 15. So in this case here, price came down bearish. This is the 30-minute. Price came down bearish. Price created a support. And then now we're kind of at a very minor resistance level, very minor level here. So what could happen here is we can actually, for one, the first step I'll look for is, okay, maybe we can get a bearish candle closure, right? And obviously this works best when we're in a session, like pre-session. So pre-Asian, pre-London, pre-New York. Those are the sessions I look for entries on until the opening of the sessions. But the first thing I'll look for here is just, okay, maybe if we get a bearish candle closure at resistance, we can look to continue down to retest the low. So maybe it's even, we don't necessarily have to wait for a break of that, 4-hour support, which is the white line. We can actually just wait for some type of, let me go ahead and mark this up again. You can wait for some type of resistance to be created here. So price can drive down and getting even a better earlier entry in. So it's a lot of anticipation. A lot of it has to do with the higher time frame just coming down to a smaller time frame. So I have my resistance marked up right here, and depending on how price reacts here, if price were to break through and not close bearish at resistance here, if price were to just break through a bullish above the range, then normally people would be looking for buys, right? Because obviously you're breaking above resistance here, you're looking left, and price looks clean to continue up. It's clean traffic. But if we're on like a bearish trend here, this is another thing. In this case, what can happen is price could form a fake out here. And what that is, I'll get into in a second. You guys might be confused, but what a fake out is okay, we break up above the range like so. Right? Okay, broke above the range, and you're expecting prices to just continue up towards the next resistance like this. But what happens in this case, a lot of times I see on a trending bearish day, is price will then close bearish back in the range. So when that happens, the reason why it's called a fake out isn't just because market's trying to fake it or anything. It's just an easier name to call it than it's basically just price breaking above resistance and now breaking back to the support. So therefore, if we're breaking support, high chance price has to continue down towards the next support. So if I'm looking for sells this day during this session, I'll be waiting for a candle closing back in the range, and then I'll take an entry off this candle, have my stop loss above the previous candle highs up here, and target roughly around here, or maybe even runner positions. So what a runner position is when you close like maybe half your positions, 50% of your positions, 60%, and you leave the rest 4% running risk-free, stops to break even towards your next destination. So it's kind of like you're turning your scalp trade into a swing trade in this situation. But usually when I see fake outs, like what I just drew out there, 85% chance of the time we fill the range, and a 75% chance we do break below the support once you continue further down. Because sorry, go on.
How often, like when you got a runner, how often do you get stopped out at break even, and how often does it run?
Runners, I'll say they run 20% of the time they play out, 80% of the time they get stopped at break even.
Oh, okay.
But if when they play out, it'll be worth the runner.
Yeah.
Yep.
Yeah.
Also, another thing about this is you guys see how you see the structure here. Just focus on this. Like I'm gonna block this out for you guys so you guys don't get confused. But
hey guys, quick message from my sponsor Sage Capital. Now they provide education software and tools needed to increase anyone's ability to trade more successfully. Perfect for people who are either still learning, too busy, or just want to use professional grade strategies to build passive income. They've achieved high returns with relatively low risk and are available for auto copying today. Go to sagecapital.co.uk or click the link above and start auto trading today.
If you were to block this out and just look at this, if you look at this candle here, this is one, sorry, let me go with my red candle. This is one bearish candle here because this is how the day started, up here, right? So this is how the day started. This is how the candle will look. I'll say right there. This is now the candle. And I'll show you guys why. Because look, this is the high of the candle. That's the high, right? This is a low. That's the low. Look at where the day closed. It just closed like I think 4 minutes ago, right? So this is how the day closed. Therefore, this is just a wick on the higher time frame. This is just a wick on the daily time frames here. Therefore, sorry, let me go over here and show you guys. If this is a bearish candle here and we had that wick, people would consider this as a wick fill. The next candle would potentially push down to fill this wick. But again, like I said in my podcast, you gotta know the why things, right? You can't just say whatever for whatever. It has to make sense. And in this case, it makes perfect sense because what's happening here again is price is just creating a resistance. This wick here is just a range. You have a resistance, then you have support. All the price is doing, if it were to push down to fill this wick on a higher time frame, is just on a smaller time frame, just create a resistance to retest the lows again. So that's what I see as wick fills. Yeah, so high chance today's daily candle, go back on the daily, will continue down to fill this wick and potentially push down towards the next range, especially if on the smaller time frames we are able to break below 146,447, which you go on where prices right now, below a support. Another entry I'll look for is just, let's say price does close bearish at resistance. I'll either enter there or I'll wait for a closure below the range here to continue back down. This will be the first entry. Stop loss period is kind of high. If I don't get that entry and I miss this move here, I'm able to catch this once you break below the range. And this would be a safer entry because you're just waiting for the overall range to break out, right? You're not just anticipating the range. This requires, I would say, a bit more experience. It's a bit harder.
And as per your salary trade, would you be waiting for a bullish candle before you take your entry, or are you
Yes.
just getting it?
So let's say price were to push down here, bearish, and we come to the bottom support. Okay, let's say now we don't break the support yet. We're still at support. We haven't got any closures below this range yet, right? So what I'll wait for is, okay, maybe we can get a bullish candle rejecting the support. This is when I'll enter the sell stop, start replay. I'll enter the sell stop below here, and wherever the next candle is, let's say the next candle comes up. Oh, that's not bogey. That's not. Next candle comes up, comes back down, breaks the lows. Wherever the high is, as long as this high does not break this high, my stop loss would be the current candle entry there and target wherever. It's just more of an anticipation that we're gonna push down with the volume. And usually this works again with the New York session open, London opening, or Asian opening, depending on what time you're trading during that day or session.
Nice. Awesome.
Let me go on replay mode. I know you're a big fan of replay mode. I'm gonna go back to somewhere random where I can't see. Just show you guys just a simple breakdown from scratch. Go over here. Okay, so this is where price is, right? If I'm coming to a chart and if this is the first thing I see, what I'll wait for here is, I notice off the rip that we have a support formed right here. Let me go ahead and draw that out. And the reason why I'm drawing my I guess my zone right here is just because if you guys look at this, price has came down to this level once before and many times up here, but we never got an actual closure in the range. Therefore, price is still respecting the support and price is still respecting this resistance. So that's where I'll draw my level at, right? As you see, same thing happened here. Price came down, but it doesn't mean it broke support. I think a better way we can break support is if we were to get a closure below the range to continue down. So something like this. That's what I'm waiting for, right? To take more sells. Obviously, that'll be my support, and then I'll have a range somewhere, let's say, in this case, maybe, I'll say right here, this resistance right here, just because we have rejected these levels many times here, and this is a level that price struggled breaking through. So now that you have a resistance, now you have support, this is now to be considered a range. This is not considered a range, right? So this is a range. You're just waiting for two things here. You're waiting for either a break above to continue up or a break below to continue down. But in this case, again, you gotta look at the higher time frames. If the time frame is bearish, then I'll look for sells. I'll try to avoid the buys because again, you can get caught in that fake ups that I mentioned earlier. And I'll try to avoid this, and I'll try to just catch the sells below the range here. So below here, coming down the next support. So the next support for me, the next clean traffic area will be. Again, you're looking left, right? You're looking left. Price breaks below, look left, clean traffic. Price breaks down below, look left, clean traffic. Oh, look, you have traffic here. So this is a level where I'll mark my support at, saying, okay, price has issues breaking through here. I'm going to mark that up as my next zone. So if I'm looking for a trade here, I'll wait for a closure below the range. And how big is this range here? Let's see. Yeah, closure like this, maybe. I'm just drawing candles out, right? These aren't obviously how they look, but yeah, closure like this. I'll look for sales coming down. This would be about a 18 pip range, right? So enter off the next candle, stop loss previous candle high, and this would be the trade.
Okay, yeah. right. So your trade is looking for. Hang on. So where are you entering? You're entering on the stop loss. You're entering below that bottom of that range there.
I'll enter off the opening of this candle.
Okay, cool. Yeah, that's what I thought. Okay. Yep. Yeah, and when you say clear traffic, I mean, do you want to sort of just explain what's defined as like clear traffic for you?
Yep. Let me give you guys an example. So this would be considered clean traffic. If we were to get a range formed like so, a support formed, and then a resistance formed somewhere up here, right? This below here, like I wouldn't be interested in the ranges, just because it gets very choppy in those levels. I'll be more interested in just clean traffic. In this case, it's going to be right here. So let's say before we had this, let me go back, make it easier. Before we had this is how markets looked. If I'm looking for sells, I'm looking for sells as price breaks through this range here. And again, waiting for closures or whatever setup I'm looking for to take sells coming down towards these levels. The reason that being is because this is what clean traffic is. There's nothing stopping price from breaking through this, from stopping price to continue down here in this level. It's just clean one candle traffic. And again, this is sorry.
And so if that candle had like a wick sitting behind it, a big long wick, or another red candle behind it, immediately behind it, would you consider that not to be clean?
So like maybe like this, maybe that candle.
Yeah, like that one. So there's a wick and then there's a candle. Is that clean still or not clean?
Yes, because I'm just looking at the most recent areas, right? And that's gonna be this candle right there. So,
okay, but so say you're going up through that candle, like that candle hadn't painted yet, and you're looking left. Are you considering that like you've got those bearish candles there? They're clean or not clean?
I wouldn't consider this clean traffic. No.
Okay.
I'll be focused on just catching the sells coming down towards this TP here, this range. Yep.
Okay. And do you want to play out and see if you can find a trade for us?
Yeah, sure. That's a little quick simulation. Yep. So,
and we'll definitely get you on the replay challenge, or the Forex simulator challenge that we've got going forward.
So, in this case, I couldn't really get an entry here just because this candle did not close below the range here. I mean, you could sometimes anticipate this, but again, you can just risk the chances of you being stuck in the range. Though you can just reject off the support to go back up, right? So, I'm not sure how the 15 looks. I mean, yeah, I couldn't have gotten entry here if I wanted to be honest. Anywhere. I'll miss this trade probably if I was on the live streams this day.
Yeah.
Maybe in the future, during a simulation, I'll show you guys how I could look up for entries. But going back to what I was trying to say earlier about clean traffic going up, right? Because this day and this day were two completely different days or two completely different sessions. So remember the day when we went up here? I said how you never really missed the move. It's always going to be there in the future. Because look, all you gotta do is wait for all you gotta do is wait for a range. And in the future, when you're trying to look for sells again, you're just constantly looking left because that's all I look for. Look left, and now you can catch the move coming back down to retrace that move, right? But what I see a lot of traders do is they will tend to they see a quick move going up, and all of a sudden they'll be thinking, I gotta catch a top now. I gotta catch a top to get back to the bottom. And I feel like that's where kind of there's missing pieces in that, I think.
Yeah. Awesome. Look, this is fantastic education for you guys out there watching. Thank you very much for sharing this with us, Don. Appreciate it. Do you want to let the guys know how they can get hold of you?
Yeah, so you can get a hold of me on my Control FX Instagram page, or you can just hop into the live streams and ask all the questions you want for free.
Brilliant. Well, look, guys, we've got another video where Don walks us through his celery play trade, and also there's a full podcast as well. So we'll chuck a link to his page on tradingnut.com. Guys, do remember to hit subscribe, hit like, click on the little bell, and click all so you get notified when these things go live in the future. Thanks for watching.